Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock. With news, it's a topsy-turvey world, and the big drivers of global economic activity are not helping. While the world is focused on social justice protests and the coronavirus, the bond market has been moving quickly, with falling prices for long-term bonds and rising yields. It seems investors are moving back into equities as the mood lifts about restarting major economies. If it lasts, this will have an unfortunate impact on government budget deficits that have mushroomed recently to battle the economic impacts of the pandemic. Sharply higher liabilities combined with interest rates that have almost doubled from very low levels will eat into tax revenues very fast. In a surprising announcement, the US administration reported that non-farm payrolls rose by 2.5 million in May, and the unemployment rate there declined to 13.3%. Markets were anticipating further deterioration of 8 million jobs and a 20% jobless rate. Apparently, no one noticed the jobs hiring spree in May and a minor rise in their participation rate until Saturday. China is apparently cancelling purchases of US farm commodities. They imported only $9 billion from the US in May, while exporting $37 billion to them. That is behind a huge 16% fall in May imports in China, which, along with a smaller than expected 3% fall in exports, boosted the Chinese trade surplus in May to $63 billion. It also helped them report an unexpected rise in foreign currency reserves to $3.1 trillion, at a time most analysts were expecting a decline after a general depreciation of the yuan. But despite the low level of imports, China's recovery seems to be on track. New personal loan lending, including credit card loans and consumer loans, shows signs of improvement in May. In particular, home mortgage loans in some regions have recovered to pre-coronavirus levels. US Treasury 10-year yield is up 8 basis points to 0.89%. For the full week, it is up a remarkable 26 basis points as investors start pricing risk back into American government debt, in fact, long-term debt of all governments. The gold price started a yo-yo ride at the end of last week with large falls and then rises. Since Friday, it's down $40 to $1,681 an ounce. Oil prices start the week sharply higher. US crude prices up $2 to just on $39.50 a barrel. The Brent benchmark is up to $42 a barrel. And the Kiwi dollar has risen further. We're now just on 65.1 US cents, another half-cent gain. And the last time we were this high was at the end of January. On the cross rates, we're up to 93.4 Australian cents, and that's a one-month high as well. Against the euro, we're up almost a cent to 57.6 euro cents. That means our trade-weighted index has moved up to 69.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.